Hey guys, Mike here. So, oh boy, what a red day in the market. And obviously, we talked about yesterday, Netflix and Tesla, man. I mean, if the market wanted to hammer them, they were going to pull the market right down with them. Not all of the market, which I'm going to show you. You might be surprised there. There's one index that was green, money rotating into that one. But I think the biggest story of the day got totally missed, and I put this out there to the members this morning for their morning news brief, which we're going to talk about. And, you can definitely give me your input on this one. And we're going to go over that in just a second. And we'll look at what, some key levels are for Tesla and Netflix and some others that need to hold, especially the indexes, to get a move up. But guess what? This is the name of the game, right? This is profit taking. This is those two stocks have moved up so much and over the last couple months. I mean, just insane moves, right? We've showed about just leaving behind graveyards of gaps because it kept gapping up every day and stuff. And so, people looked at it, or big money, not you, and said, I'm good. Let's dump it, And so taking profits, right? That's what happens. So, let us know if you played it or anything, earnings and stuff. And for those who, if you want to play earnings, I mean, it's not really advised, this ain't financial advice. You might have noticed, when somebody's reporting earnings, especially Netflix or Tesla, these big run-ups, the options are extremely expensive, right? Insanely expensive. The IVs are, out of this world. And so maybe look at playing a sympathy play, and that just means you're playing another stock in that sector, because those two stocks, if they have a bad or good day, they need to pull up the sector or bring down the sector, okay? I played one for Tesla, but I should have played the one, I was wanting to play Roku as a sympathy play, and I talked myself out of it. That had a much bigger drop than the EV pick I did to play with Tesla. But it doesn't always work, not financial advice, but just looking at that, because it's a much cheaper way to go. You're not going to get IV crushed or anything like that. So, just keep that in mind. So, and all you have to do is pull up a chart, the two stocks, and just go to the earnings tabs and look at them and stuff. If you have TradingView or whatever you're using, and then, see if they do actually have some of the same reaction and stuff to earnings. Now, that isn't always the case, but just keep that in mind as a side note. Now, what do we have else we have coming up as earnings? Well, more jobs data. And as you can see, initial jobless claims came in less than expected. So the market's like, oh, okay, that pretty much solidifies. There's going to be a interest rate hike this month, which will come up next week, we'll see. U.S. continuous jobless claims actually did tick up slightly, because you see it's been coming down. So do people still need the benefits or not? But again, still showing a hot market and everything. And before I show you this next chart, let me ask you a question. Which one do you think is more beneficial for the economy? Is it new homes selling, or is existing homes selling? And tell me what you think. I'm going to go over this chart real quick to show you, because we got existing homes sold, and you can see it's just abysmal, right? It went down again. Obviously, it's down in the dumps. I mean, it's literally at 2020 levels, which is crazy because we had shut down the world in 2020. It's down to 08. It's not quite got down to 08, 09 levels, but it's not too far off. And when you look at the average, I mean, you see that's where we need to get back up to at least, but we're just not there. And you can see at the bottom down there, like this is, month over month. And you can see you got, out of like all of 2022 and this year, one positive. The rest of them are all negative, right? And when you go across, it's usually not the case at all until you get back to, 09, I guess, really. Or actually, when you look back there, it's 06, 07. When you see it, not even 08, 09, but I mean, you got to start having some positive moves up. I just don't know where it's going to come from, honestly. Because again, I'm not moving. Everybody in the comments put they're not moving. The only way it makes sense is if you're moving from a more expensive state like California, which some of you said you've done, moving from a New York. But, if you're moving from Florida to California or Florida to New York, it makes no sense. Like, you got to be coming from a much more expensive state for it to be beneficial for you. It makes sense. I get that. Some of you just said that, so it makes sense. But I was going to tell you, the answer is the reason why it's so important for existing home sales to move, okay, is because what's happening. As I've talked back in the past, when it comes to this, this savings we're doing, right? We just shift from an account to an account. Well, all you're doing, if I'm putting $20,000 down on a home and buying this home from, let's say, Jim over here, well, guess what? Jim's the beneficiary. He gets to sell the home and whatever equity's in it, he gets to keep, right? So his savings account just went up, probably way more than what I just spent, okay? When you're selling a new home, who's beneficiary? You see it in the stocks right now. It's the home builders and stuff, right? That's why they're all-time new highs, because that's what's selling, not the existing homes, okay? And who knows how long that's going to go on for? I don't know. Like, I don't remember a time where we've seen, this kind of shortage in supply and people in existing homes just not leaving or putting them on the market. So, I don't know, let me know in the comments if you're in the business, but yeah, it's much more beneficial. Now, from what the Fed wants to do, in a way, it's like, well, maybe it is better that just the new homes are selling, so people are literally taking money out of their savings account and putting it into these homes, right? And there's no beneficial party that's going to be increasing their savings and going out and spending in the economy, because the home builders aren't going to be spending. All they're doing, obviously buying wood and things like that, but they're not going to buy groceries and stuff, okay? And shoes and clothes and cars. So, I don't know. So just keep that in mind as this goes on. We'll see how it plays out. Now, the most important story in the market today, as far as I'm concerned, and I put this in the morning news brief, was Taiwan Semiconductors, right? So they reported earnings too. They went down, brought all the chip makers with them. But here's what they said. So they cut their annual outlook revenue and postponed the start of the production at Signature Arizona project because things are really expensive and they can't find enough help. Now, the surprise cut in 2020 revenue projections sent a warning to investors that the global electronics slump may persist for some time despite a boom in AI development. And here's the important part to take away. The main chip maker for Apple and Nvidia projected a 10% fall in sales this year versus previous guidance for a single-digit decline. Executives also warn investors to temper their expectations for a boom in chips for training AI models, saying it was uncertain whether the surge in demand in the wake of ChatGPT was long-term or sustainable. The short-term frenzy about AI demand definitely cannot be extrapolated for the long term. Chairman Martin Liu told analysts on the conference call, neither can we predict for next year how the sudden demand will go. And guys, before we continue, if you get anything out of this, please hit that thumbs up down there. I really appreciate it. And if you like the material here and the videos, think about subscribing. And so to me, that was the most important thing, because again, that's what we've been talking about. We don't know. We got to be patient and got to hear AMD report and NVIDIA report on these semiconductor companies, right? Because they're saying, especially NVIDIA, obviously, they've made big moves up as far as the next quarter, but what's after that, right? Is this just a one quarter thing where everybody's trying to get in? Because what did Elon Musk come out and say today? They can't get enough equipment from NVIDIA. NVIDIA can't keep up with their demand because they're building a supercomputer now, if you hadn't heard. And so to help them with their AI stuff. And so obviously, again, is it just a one quarter thing, a 2 quarter phenomenon? Like, what is it? And then of course AMD, they're on the second tier, right? So a lot of companies can't afford the best chips, so they're going to go with the second best chips, and so they're exploring that for AMD. And so, but remember, who makes them? It's Taiwan Semiconductors makes the majority of chips in the whole world, right? And so when they're telling you there's going to be a slowdown, then on top of that, what do you got? Apple, right? Because they're the ones that obviously supply Apple and stuff with their chips, and they're saying there's a cell phone or smartphone, slowdown across the world, tablets, all this stuff. So how's it going to affect Apple? So to me, that was the biggest story, and we just got to wait and see and find out and hear from Apple and NVIDIA and their guidance, and we got little ways to go on NVIDIA, right? And so, but if it is a 1 or 2 quarter phenomenon where the demand's way up here and all of a sudden it drops, what do you think is going to happen? And so that's what you got to keep in mind. Again, we just got to let it play out and stuff, but I want you to be aware of it. So obviously, everything looked bad, but guess what? The Dow, and again, I said I'm going to show you why this is not your granddaddy's Dow anymore. That inverse head and shoulders continues to play out, and I just put trend spiders up here because theirs look better, and I have an account with them, so why not? And you can see, here's what like the Dow 30 holds, for example. Very diverse, but you're going to have tech, you're going to have industrials, you're going to have banks, financials, that is. You're going to have cyclicals, you name it, and you see a lot of stocks were up. There were stocks that were down, no doubt about that. But, it's how they weight things as well in there. They're not like the QQQ and their weightings and stuff, so just keep that in mind. Now, as far as like why you saw the S&P not performing as bad as the Qs, because one, financials were up, the energy stocks were up, so that actually helped the S&P out quite a bit. But what'd you see down a lot? It was going to end up being the high beta stuff. It's been running up like mad, down huge today, right? And so the ARC stuff, all that good stuff, your software stocks, all of the big boys pretty much were down. And so, just keep that in mind as you go through this. And of course, what else didn't happen? And you got to keep an eye on this for the next few days. The dip buyers didn't come running in to save the day, which kind of surprised me when it came to Tesla and Netflix, especially. But again, we'll see if they come running in tomorrow, and I'll show you why. But when we look at the Qs, obviously, and we talked about a pullback. Well, I guess I've been talking about it forever, but yesterday especially, if you watch that video, maybe getting down to that 50 at some point in time this summer, and we're a little ways away. But again, I wouldn't even think about, if you're a bull sitting there trying to panic out anything until you get past that trend line. But if you break the 50, which is a ways to go, then yeah. But besides that, I mean, the bears got a lot of work if they want to try to push this thing down. And again, you got these gaps that's left behind. It didn't fill a single gap today, by the way. It left a gap above it. And when we look closer here, you can see right there around 372, 373. Like if the bears really want to get a nice pullback on this, they're going to have to push it through that level, because there will be demand sitting there waiting at that level for sure. Okay. And again, this is not going to be some straight down thing or whatever, because let's not forget that we got huge earnings. The biggest earnings are coming up next week, and you got the Fed meeting next week. And so, that right there is a whole different story. If you get Apple, Microsoft, all those big boys coming out and earnings don't pan out, or the market wants to perceive it in a certain way, because guess what? They ran up a lot, right? And so, that's a whole different story. Remember, when it comes to earnings, it's how many times we see this fourth quarter, first quarter, terrible earnings, and the stocks went up. It's what the market wants to make of it, right? They can sit there and pick and choose and go, oh, Tesla's margins were down. See you later. Oh, Netflix, you missed revenues. You're not going to raise prices for the rest of the year. Up we, down we go, right? And so they can do the same thing on these other stocks coming out, right? I mean, Apple usually don't even guide. So, but they can find something if they want to find it, so they can get in at a cheaper price when they want to get in, right? I mean, so just keep that in mind, especially because they're up huge in all those stocks. So just keep that in mind. That's kind of the game, right? Now, IWM down about 1% today, and this trend line basically it broke out. We had talked about that. But it came down, held it, which was actually good. You can see us getting a little bit above that 50-day moving average. But this one just really, once it got down about 1%, it just held between like 0.80 and 1.10 as I watched the chart all day. And you can see it just bouncing right up on that trend line and stuff. So this one actually has built out support, right? So it doesn't move like a tech stock or anything. And so it actually is more of a constructive chart to look at and stuff. And it's got a big demand zone down right beneath that trend line. So we'll have to see this play. But you can see right there, I mean, once it got above the trend line, it just sat there and kept bouncing. Now, Tesla, obviously, you can see it gap down. You see this graveyard of gaps. We did get 2 of them filled today. Got them out halfway between the last one on the chart you see and the one at filled. But again, on the short term, as I'm talking about, you might see dip buyers come in. On the short term, you can see on the hourly, what is it? It's oversold, okay? And the bulls, what they want to do is get it above 268. They got to capture that level again to try to push this thing back up. Bears, obviously, will continue to try to fight that zone for sure, try to push this thing down. I mean, if they can get it through that second gap down there, then you can see 250, right? But again, we're going to have to see. Right now, again, 268 is what you want to target if you're a bull. 250 bears, so just keep that in mind. If we move on to Netflix, surprising to me they didn't want to complete the gap, but again, now you got another gap within the gap right there, and this one right here, if we just kind of scroll out, you can see huge graveyard of gaps left behind. This is how gaps get filled. You get these big earnings moves down and stuff, but it didn't fill a single gap. It just left a gap above it. And you can see plenty of demand right there is where it stopped for the day. Again, on the hourly, it's almost in the oversold territory right there. So you could get that short-term bounce tomorrow. And if you look on the daily on Netflix, it's just another one of those with the RSI, was setting a lower high while the stock was still railing up, just like Microsoft did. So many of these stocks have done. So, it shouldn't be too big a surprise. Now, AMD obviously got taken down the rest of the semiconductor stocks. But again, that level right there is a huge demand zone. Again, you got that trend line, you got the 50, you got that 110 level. If it does break this, if they continue to push this one down, right, then I'm thinking 102, 103. Could be wrong, but I'm thinking 102, 103. And if you scroll over, you'll see why, because there's a lot of demand at that level and stuff. So just keep that in mind as we look at this right here. And when it comes to earnings, obviously tomorrow, the only thing I'm looking at is American Express. You got some more regional banks and others reporting, but nothing that's going to rock the market or anything until obviously the big boys report next week, and the Fed also to see if they do the rate hike. But keep in mind the setup today was simple. What we talked about yesterday, you had VIX-piration, right? 3.6 million call options expire on the VIX. So it was going to be allowed to move up, actually, believe it or not, if it wanted to. And it got to move up some today, right? Obviously, you're coming in, you got monthly OPEX. It's Friday. Then you got 2 big guys like Netflix and Tesla reporting, and the market didn't like what they wanted to hear, so they sold it off, which of course dragged everything else down. And I think the Taiwan Semiconductors, story was really the headline of it all. So you know, it's going to be an interesting week coming up next week for sure. The only thing we can guarantee is a whole lot of volatility because you cannot predict these earnings. There's no way. So, you know, just keep that in mind, guys. So, hope you got something out of it, guys. Hit that like and subscribe button. I really appreciate it. Appreciate all you guys that watch. And I'll see you tomorrow.